I want to get more on how American consumers could be impacted by the new tariffs on nearly all imports from Mexico, Canada, and China, and how the market is reacting. Elizabeth Schulze is on Wall Street for us this morning. Good morning, Elizabeth.
Good morning, Robin. The stock market is opening sharply lower this morning as investors and companies come to reality with these sweeping tariffs on Canada, Mexico, and China. Their scope is massive. President Trump imposed tariffs worth about $400 billion in his first term. This would hit $1.3 trillion in goods, and consumers could pay the price.
This morning, American households and businesses are bracing for higher prices for nearly half of all goods imported into the U.S.
From fresh fruits and vegetables from Mexico to maple syrup and vehicles from Canada to consumer electronics and toys from China and lots of stuff in between.
President Trump's far-reaching tariffs mean businesses will pay the U.S. government a higher fee when their shipments enter at the border. Economists warn companies historically pass down those higher costs to consumers.
Americans need to prepare for higher prices.
Within weeks, prices could get more expensive in the grocery aisle, where margins are tight and retailers can't stockpile. 47% of all imported vegetables come from Mexico and Canada, 91% of avocados, and about 87% of tomatoes from Mexico. The auto sector also highly exposed. New car prices could go up $3,000 on average if the tariffs stay in effect. Small businesses like the Penny Ice Creamery in California import key ingredients from Canada.
If we see costs go up because of tariffs, we will have to pass those on to our customers.
Prices are likely to rise on clothes, appliances, and children's toys, with 85% of all toys in the U.S. made in China. The CEO of toy company Basic Fun tells us the price of a popular toy like a Tonka truck could go up from $30 now to $40 by Christmas.
We just don't have the opportunity to just bring this manufacturing back to the United States.
Building materials are also at risk, potentially raising the cost of buying a new home.
Now, oil is also trading higher this morning. About 60% of imported crude oil to the U.S. comes from Canada, so that could mean higher prices at the gas pump, up to 20 cents, especially in regions like the Midwest or in the Northeast. Guys.
A lot of impact there, Elizabeth. Thank you. And guys, this really just shows how interconnected our economies are. There are major consequences, ripple effects across the board, especially with small businesses. Those stocks are some of the worst hit this morning. They're down the most. And I heard from a number of small business owners over the weekend. They're really scrambling to figure out what they're going to do. You heard there from Elizabeth, automakers, right. That cost of a car could go up $3,000. That is because most car parts, even when the car is made here in the U.S., the car parts generally come from Mexico and Canada. And on Wall Street, virtually every economist, it's unanimous, they believe that if these tariffs go into effect, if they last a long time, they impact our growth here, they cause inflation and potentially even a recession if it goes on long enough, which is why Wall Street at this moment expects this to be short-lived. They see this as a strategic move at this particular moment in time. They believe that if it were to go on for a very extensive period of time, it's going to impact the market. Yeah. President Trump has talked about the market as his report card. That would not be a good-looking report card.
And you've often said the market does not like uncertainty.
Hates uncertainty, and this is a big piece of uncertainty.
Okay. Thank you.
So these are critical meetings this morning.
Yes.